Good morning, sunshine.
Welcome to the real world. Whoa!
Mortgage your house and buy Bitcoin with it.
Green air.
There is no second best, okay?
GM. GM. Breathe air. Thursday, 12th of September. All right. So, couple levels that I see as important. Bitcoin yesterday had a nice dip into this hourly order block that was preceding the impulse. It just touched into it as well. It wasn't able to push that far into it. Good sign of demand there. Impulsing away from that has left a gap quite clearly. So if you're looking at the potential pullback area, there's plenty of room down there for the market to pull back. It has taken out these highs. It may continue higher first. From a perspective of building, if you're doing like upward sloping accumulation, it actually would be better for the market to pull back and consolidate more. The more consolidation you could see here, and the more it builds into sort of a consolidation structure, the better that potential breakout would be. If it continues higher, it's probably a sign of, shorts are too short, longs are a bit offside, and it goes higher. And like people are like, shit, I'll buy the next dip, but the dip doesn't come. That's when you set up this kind of more FOMO where people have to get long at a bad place, and then the pullback can be more, pushing back up for a retest up here. That pullback then is more of a bearish pullback, or at least leading to more consolidation rather than immediate continuation. You have to look at it and think, okay, what's going to make traders want to buy Bitcoin and not sell at these kind of high 50s area? Has the downside finished? Is the reaccumulation done? Was there even reaccumulation? All these questions are very important, because if you view this phase as a distribution, which it's hard to say it was anything other than that, we pushed up into the highs, ETFs, a lot of billions of dollars of buying, and clearly the sellers were happy to take the prices. Like the sellers were happy to sell here. So are they going to buy back? Assuming the sellers are smart and the buyers are dumb. Reason being is that the ETF buyers were mostly small. We know this. The numbers were mostly small retail. The average ETF buy order for the past, I think it's 2 or 3 months, has been $12,000, which indicates it's not massive players. It's more a lot of retail. And we know that, grayscale outflows is more smart money generally, because they're people who've been in longer and they have more money. So typically, if people have been trapped in GBTC, or if people are OGs waiting to sell their coins on the ETF launch, they're probably smarter. They're probably more of the impactful side of the market, replaced by some smaller fish. So my question always is, when you have a distribution, where does reaccumulation occur? If people were happy to keep selling at 62 and even at 63 and even again at 63, are they going to get fully back in the 50s, like in the high to mid 50s? Don't know. Seems unlikely, but again, this distribution never had a confirmation, right? So a distribution like this, if it is one, would have to have a breakdown to be confirmed. Otherwise, this is just sort of a really lengthy downward sloping consolidation. The problem with that is weakness is just weakness, right? You can see the lower highs are getting lower. The bounces were coming all the way up, then even coming all the way up. Then this bounce was significantly lower. So you can't hide and ignore the fact that the market has been showing weakness. Is this based on a cycle distribution for BTC? There's one thing, some of these indicators, there's the Coindays destroyed, I saw. Some of these indicators that people look at for on-chain metrics. Where is it? Coindays destroyed. Here we go. Someone was sharing this. I saw someone sharing this saying like, there we go. Someone was sharing this and saying that this isn't the same one, is it? Trying to see here. I'll have to find the one. I didn't save it off Twitter. But I see a lot of the same kind of thing where it's like, oh, well, if you're using these measures that people tend to use in bull markets, and you see like, okay, net unrealized profit and loss, you'll notice that when it spikes, so the orange into red, when it spikes, it's near market tops. Spikes near market tops. Spikes, it was on the way, and then it double topped sort of in 2017-18. Spike was at the very top of the 2019 echo bubble. Spiked again and topped out around the top in 2021. Had a second bounce in late 21. This, I mean, it is the same thing. And there is a long run trend of, if you just take that off, there is a long run trend of these NUPL spikes getting lower and lower and lower and lower. So you would expect the NUPL to top out at a lower price this cycle, and it has done. And then it just seems like there's a lack of recognition that these things, which previously people would use to say, oh, here's the top, here's the bottom, it's like they're being ignored now, rather than just saying, well, why would it be different? Yeah. And I need to find that coin is destroyed, because there's a really good one that shows like really clearly on that measure that it's literally a cycle top. And someone was trying to argue on Twitter like, this is just the start. And I was like, but it's literally the same as previous tops. And I'm not like the on-chain guy. I'm not like a massive, I don't particularly care about it, but I do care whenever people are taking stuff that, it's like saying, right, let's say you're more of a price action trader like I am, and you use something like the bands, right? And you're like, it's like saying, oh, the bands have gone red. But don't worry, that's not bearish, because look, the bands went red here. So therefore, it's like, well, but no, also when the bands go red, it's the end of the bull market, right? So it's the end of the bull. It's the end of the bull. And even over here, right, it was also the end in terms of it went much lower to 3K. And then it goes below it and reclaims it, but that's after a significant decline. It's like, if you're looking at end of major trends, the bands do go red on the weekly. It's just a sign that the moving averages, we're not above them, we're below them. It's not about, there's so much of this now where you don't want to like be like, no, this time, literally that old phrase, this time is different. Well, no, you don't want to say that, because the whole point of using any analysis method is that you use it objectively. And you say, when the bands go red, it's typically the end of whatever trend we had. It doesn't always mean it is, but you have to wait for that to be invalidated. The invalidation of this is really simple. It moves back above, bands go green again, and we start to move towards the highs. Otherwise, treat it as a potential sign of weakness, right? But let's get in and look at the lower time frames here, because there is economic data today, and so for trade of the day, we have got the PPI. So yesterday we had CPI, which was at 12:30, which is over here. That was the CPI level. Price initially dumped down, pushed up, dumped again, climbed back up above it, reclaimed, and went higher. So at 12:30 today, we have CPI or PPI, sorry, I should say, and I think some unemployment claims data as well. Core PPI and unemployment claims, yeah. So like I said yesterday the market didn't react much to the CPI itself. The actual CPI candle was very small. Then we got a move around the New York Open, dump down, back above. So mostly this happened during New York session. It didn't seem to have a massive effect in terms of CPI. Let's see if the same holds true today, where the PPI is more or less impactful. And that'll give a further indication of what the market's starting to move towards now. Is the market tired of trying to sell off based on just economic data that, we all know is fake anyway, right? Don't think anybody with half a brain knows that the fucking numbers they put out are just numbers they make up or massage the numbers to say whatever they want. And that would be another good sign. So if you see not much reaction to this unemployment data plus PPI today, it's probably another good sign that the market's a bit tired of all that shit and it's going to just drift higher, at least to try 60k, maybe try 62. And as always, the way I view it going into these events here is mark out some of your untested areas. So let's get that 1 hour chart. There's an untested area down there, and there's a gap from there to here, and there's an untested area here, and you can see those two levels. So that is the high of here, gap through that level, the high of this wick, up to, really it's to there now at this point. So these are a couple of areas of inefficiency that have been left behind by this rally, and the market's taken the highs, so it has taken this liquidity. It could reverse, and if it does, you're looking at, does it hold here and does it hold here? Because the market itself, like you saw it here, we gapped away on Monday, chopped around, came all the way back, retested it, and then continued higher. So the tendency for the market to come back and retest these inefficiencies is still there. We have filled most of the inefficiencies on the way down. So there was a gap there and we filled it. There was a gap all the way up to here and we filled it. And it's pushed to the highs now. Another gap is above here to about 58.9, 59k. But otherwise, the inefficiency has been filled here and we might spend some time consolidating. Price took a while to push through this area on the way down. It can do the same on the way up. There's plenty of room to run above if it does, if there is some kind of shift that allows the market to rally further. There's plenty of room for that. What would make the market do that? There has to be some kind of returning confidence about the outlook for BTC moving ahead. It doesn't need that much to rally here because we're in an area where people don't really want to get long. So when people don't want to get long, it can just drift higher. And then it will have some kind of an impulse that makes people FOMO. It's like here. We had this kind of choppy phase. People didn't want to get long. Then everyone wanted to buy the breakout. It failed. Same here, kind of grinded. And then impulse, people said, oh, let's get long. And then it tops out. So is this going to continue? I think there are reasons yes, reasons no, reasons against. We've pumped off the open today, so there's a gap left below. There's no wick on the daily. We've got the gaps from yesterday. So a pullback is possible. But when you see these rallies, you often leave behind loads of gaps, right? Oftentimes the market will move up and it will move away and it will move away and eventually come back much later on. Or you have over here, plenty of gaps getting left here. That was the Trump getting shot. Gaps. It went way higher, kept going, eventually came back weeks later. So it doesn't have to reverse. If you see gaps below, it does not mean the market has to come back straight away. If the market pulls back, that's where it should go to. But it equally can just continue higher first. Right? It could just go higher for a couple of weeks and come back later on. So if you're day trading it today, PPI is your best bet an hour before the New York session. And then we're now going into our fourth New York session of the week. Monday was bullish. Tried to sell off, was bullish. Tuesday, tried to sell off and reversed. It wasn't like super bullish, but it tried to sell off and moved up. Wednesday, definitely bullish. Tried to sell off, rallied higher. So what's Thursday going to be? There'll probably be some profit taking today or tomorrow by intra-week traders who are getting long Monday, getting long Tuesday, getting long Wednesday. They're probably going to want to take some profits going into the weekend. Weekends are always uncertain. We've got this rate cut next week, so probably going to see some profit taking there. And overall, though we're sort of rallying, don't forget it's still a mean reverting market, so it's not a place where there is a clear directional trend yet, and there's a huge amount of supply above that the market's trying to grind its way through. That will probably not be a massive move in one direction. You're probably going to see a bit more choppy grinding action as we go into getting closer to the weekend. And that's it. GM. So until it stops working, just continue to trade around the New York session, I guess. Data at 12:30. New York session opens at 1:30. That has been when all the moves have came. So I would expect if there's going to be a move today, it's probably going to be around that time frame. Until that stops working, I would continue with that approach. GM.